This is the FFR Trading Market Minute, and again, a daily candlestick chart of the S&P 500, or the SPY, the ETF for the S&P 500. And after hitting our upside target at 600, that was my year-end target, after the election, it kind of zoomed up there. It's rolled over now back to the support. So this resistance, this prior resistance here, role reversal now becomes support, but we also have the 20-period moving average support here. Now, we're selling off here today. This is Thursday, but so far this support has held, and the tendency is about 70 to about 75% of the time the market likes to rally into Thanksgiving. You do have that Christmas rally. That's about an 80% probability. The last week of December into early January, the market likes to rally, but nothing's 100%. So we'll see if the market can hold support here. If it does, I do think, we did cross, it's ever so slight, but the RSI did close above its moving average here. And that was on this day here, on Wednesday, and this morning we gapped up and we took out that high. So let's see if this moving average and this support holds, and the market can then turn and then rally into the holidays. One thing I did want to point out on that gap up today, notice it filled this open gap, that upside gap from these prior days here. So that's an 80% probability that the market likes to fill these gaps. If the support does break, right, it's possible there is this big election gap to fill below the market. So just as the market filled this gap, this up gap here back during this period, you can see this this gap is still left unfilled. So if that support breaks, then I expect that we will fill this gap back down here. Expect a bit of a slow week next week, economic data-wise. Tuesday, the FOMC minutes at 2 o'clock. That will be a market mover. And then Wednesday's core personal consumption expenditures and GDP. All right, hope that helps. Have a great rest of your trading week. We'll see you back next week in the FFR Trading Market Minute.